Everybody, this is the monthly trend scan of the futures market. So let's have a look here at the higher time frames. It's actually the US equities are actually still very bullish, although it doesn't feel like. Well, we are stuck here in this range, right? And this range is lasting for more than 2 years, right? But overall, well, we are on a quarterly chart, we're in a very strong EMA trend still, and this is a consolidation pattern. This used to be an S1 pattern, but it didn't go off, and it actually morphed into an S2 here on the weekly chart. So I'm considering that now as an S2 turtle pattern. The official entry for the signal is a break of the last dominant high, and this is where the stop goes. This is a nice pattern. The longer the pattern grows, well, the more energy is stored. Once we get moving, we should actually see a momentum move of this sort to emerge out of this consolidation pattern. The ES looks similar, but let's have a look at the Russell. The Russell has a different pattern. So the Russell has might have an S1 pattern on the monthly chart to set up. So this is the base, and what we need is a test bar. And it's some sort of bar, big red bar like this with a re-break of the base. We're already sitting at the 21, so the test bar might not be that pronounced. So that would be a bullish confirmation of the S2 patterns in the YM on the weekly chart. Now let's have a look at another asset class, the metals here, the precious metals. We have this Middle East conflict, Israel, Hamas, Palestine, and this is the reaction we see, right? I mean, it's bullish for the precious metals. Whenever there's war, there's uncertainty in the world and in the markets. So we see precious metals to show bullishness, and that's what we see here. Well, if we didn't know that there's some war going on, well, we would just say, well, that is normal price action, because what we have here is, well, that's an S1 pattern on the monthly chart. It has made its first move, and then it's putting in a pullback back to the base, finding support at the base and the 21 as well. Here on the quarterly chart, it's coming back to find support at the 21. So nothing special yet is happening. Well, we see a big bar here, right, on the week, this is it. It's just showing us that there's bullishness in the market for the metals. Let's have a look at silver, because silver gives us actually, well, it's correlated. We've got another S1 pattern here on the monthly, but with silver, well, we're actually putting in an S1 pattern on the weekly here, right? So we've got a pattern on the weekly within a pattern on a monthly, well, within a pattern on the quarterly. So we've got patterns within patterns within patterns. Well, this adds up a lot of energy, but it makes timing as well more difficult, right? For the lower time frame pattern to be traded. But once it goes, right, once it starts moving, well, we should actually see a big move coming in. When? Well, we'll have to see. The first signal would be a rebreak of the base and seeing some price action, more follow through to come in, similar to these series of weekly bars. And then we might actually see how the monthly as well shows follow through. And then we might see, as the bars grow, that the quarterly chart, right, the quarterly bar might grow bigger and show follow through. Now let's have a look at crude oil. That's always interesting as well, if there are some geopolitical tensions. We see it here, where we see some gap up, right, and some price reaction. Not a lot yet. I mean, price is still in the influence zone of the 200 moving average, so the war didn't crash through it, right? So it's still a normal price action as well here. If we didn't know it, we would just think it's normal price action, because price pulled back to the 21. That's a healthy pullback. And it's now struggling here, right, with the 200 moving average. But these tensions might potentially, could be bullish for crude and the other energies. We might actually see how there's follow through, right, after this first leg up, pullback, or maybe it's a second leg, right, pullback, couldn't break this stop run level, important level, because it's a triple level. If more bullishness comes in, once this level breaks, well, then we should actually see an attack trying trying to break the consolidation high at around $150 per barrel. Now let's have a look at the DX, the US dollar index, especially during these geopolitical events, where we see the reaction. See a reaction here, right? A big red bar came down as well here. If we didn't know, that's just normal healthy price reaction back to the 21, and now we see bullishness here. That's the first bigger bar, right? We might actually see a continuation of this bull that has started quite some time back. Well, now there's nothing in the way, no resistance in the way. Well, the next level of resistance is the consolidation high, that's an important level. It's a stop run level, right? It's a wick high. If that breaks, well then this start of this overall down leg becomes then the target, which is a target that I had laid out back here, right? When this wick high was broken, well then this target was basically locked in. So let's see if we get there. We might never get there. But if we do, well then that's basically where I see the end of dollar strength. Thank you.